Um, okay, well, I'm going to welcome everybody. It's good to be here today. I got a special guest by the name of Mr. Andre Burnell. He's an account executive with Angel Oak Mortgage Solutions. And so, Andre, can you do me a favor and just kind of introduce yourself and tell us a little bit about what your company is about?
Absolutely. Thank you so much, Will, for having me on here. My name is Andre. I am the rep for Angel Mortgage Solutions. We are a non-QM lender. Okay, I've been here for almost 5 years now. So all I do, eat, breathe, sleep is non-QM. Okay, so non-QM is a outlet for any borrower that doesn't qualify traditional way with your conventional agency loans. We have a different outlet for those borrowers that can qualify under our programs.
Okay, so just real quick, what does it take to qualify for a bank statement loan? And I mean, who would normally be that type of customer to
Absolutely. So the bank statement loan is for self-employed borrowers who've been self-employed for a minimum of 2 years. Okay, so when you get this client, he comes into your office, you review those tax returns, and you see that he writes off almost all his income. Well, that's the perfect candidate for us. Why?
Okay.
Because we qualify the borrower based off his deposits of his bank statements instead of his tax returns. So we actually don't need tax returns to qualify this self-employed borrower. We use the deposits coming in from the last 12 or 24 months to qualify them based on that income.
Oh wow. So just no tax returns at all.
Oh,
Um, wow. What about your credit score? Are you guys looking at that at all, or is what
absolutely.
consideration
Yes.
is that?
Yeah, so we are a big credit based company, so we definitely need at least two scores to qualify the bar. Right now, our minimum FICO for the bank statement program is a 660 for a max LTV of 75, 680 for 80, 700 for 85, and we go up to 90% with a 720 FICO or higher. And the best part is that none of my loans have MI.
All
So that
right.
is
So
huge.
okay. So I'll break that down for the people that may not know. MI is mortgage insurance, right? And
Correct.
that's what you normally see on a FHA loan.
FHA, conventional, anything that's
Okay.
over 80% LTV, definitely those loans will have MI, which is an extra payment of between, I would say, 40 to $200, depending on the bar that you could be saving with us and using that money towards payment of your home.
Okay. Now, would you consider any professions ineligible for this program? Let's just say I'm Uber Eats or Uber driver or something like that. They consider themselves self-employed, if they're doing it full time. So,
Right.
a- are
So
they
the ones
eligible for this?
I can think of on top of my head that I get a lot are stock traders. We won't do a loan for them.
Okay.
Um, Anybody that's a bartender that's 1099, that's not considered self-employed for us either. And unfortunately, in the marijuana or industry, we can lend to those bars as well. But
Okay.
anybody that's considered 1099 that works for an agency or has their own business, we're okay. Okay,
Okay.
but traders, the stock traders and bartenders, unfortunately, it's a no-go. But Uber drivers are good. I mean, one of my main clients are truck drivers. Truck
Okay.
drivers are one of my biggest bars. I mean, those guys, they're grinding on the road, all day, and usually they write off all their expenses because of gas, hotel, food, mileage, So those are actually one of my biggest clients.
Okay. So, are there any like steps that I can take? Let's say I'm, self-employed and I'm looking to get, bank statement loans. I take advantage of the tax credits and stuff that, that the IRS allows us to, right? But let's just say I want to increase my chances. Is there anything I should be doing as far as my bank accounts to, make it easier for your underwriters or someone else that's looking at that file?
Absolutely. Very good question. So we can use business or personal bank statements to qualify. Sometimes a bar is depositing money between the personal and the business. Well, try to keep all your money going into one account, either the business or the personal. I personally like the business better, just because it's easier for us to see all that income coming in. When it's personal, usually you see returns, Zelle, Venmo payments coming in, which depending on the type of business, we're okay to use. But if you have a business and personal, my advice is just throw everything to your business and that's the way we can qualify you based on the most income off your business account.
Okay, so you would recommend that most business owners, if they're truly in business, to keep those things separate. You know, keep your
Right,
business and your personal in two different pots.
right. Now, if you don't have a business account and you just run it off your personal, that's okay as well. No big deal.
Okay. So with that being said, you know, verifying your income. So you guys are looking at the deposits. So how are you taking 100% of the deposits that's coming to the business, or is there some type of calculation that you guys are doing?
Yeah. So the way we calculate income is we have a team that calculates income for us. What they do, let's just say we're using the last 12 months of bank statements, they're going to calculate all the deposits coming in, and we're going to take away a standard 50% expense factor. Okay, that's just a standard. Okay, so let's just say there's $250,000 worth of deposits. We take away 50%, so we'll be able to use 125,000 divided by the 12 months. But of course, every business has a different expense factor, which makes total sense. For example, a realtor does not have a 50% expense factor. A realtor probably has an expense factor less than 15 to 10%. So if
Hmm.
you get me a CPA letter or a third party account letter telling me what their expense factor is, and depending on the type of business, I can use that to use more income. For example, let's just say you get me a letter stating that the expense factor is 20%. Well, we'll use 80% of the total deposits instead of the standard 50, which brings that purchase power way higher than the 50%.
Oh wow. Okay. Okay. So that's good to know, and I think and I'm gonna reiterate on that for the audience is that when you're doing these expense letters and any other documents other than your bank statements that you're getting, you want to get a third party professional, CPA, licensed tax preparer. I think you can
Yes,
use those as well
correct.
uh, to prepare those documents. You can't like just you won't take it from the borrower, right?
Right, correct. It has to be a
Okay.
CPA or a third party accountant.
Okay. Good deal. Good deal. So when let's just say uh, compared to your standard conventional FHA, how are the rates as far as when you compared it to,
Right,
in the
absolutely. So yeah, our
yeah.
rates are definitely going to be a little bit higher, from 1.5 to maybe 3%, just depending on the FICO and LTV. Like I said before, we're a big credit-based company, so of course, if you have a better FICO, the better the rate. But again, the higher the LTV, the higher the rate. So of course, if you're in that middle ground, with a 720, 80% LTV, it's going to be a very competitive rate. Okay.
Okay.
Now, if you
Okay.
have, you're looking for 90%, which is our max, just know that our rate's not going to be the best, but we do offer that 90%. Okay.
Okay.
What I like to tell my loan officers, especially to who work with a lot of self-employed borrowers, instead of, having your accountant fix your taxes for the next year, 2 years to qualify, and you're gonna have to be paying all that money, let's just say $100,000 to be able to qualify with your tax returns. How about you keep that money in your pocket and use that money as down payment? Yes, your rate may be a little higher depending on the purchase price. You may be paying from 50 to maybe $200 a month more in payment. But now what you have to do is divide those $100 or $200 more in payment within those $100,000. And how long would that have to? That's how many months you will have to
Mhm.
pay to get that money back from yourself.
Right.
So that's huge. Keep writing everything off. We're okay with it. We're not looking at tax returns. We're just going to be looking at deposits coming in from your account to see
That's
what
good
the
to know.
true income is of your
True
business.
income. And you say 2 years at least,
They
being
have
in
to be
business.
self-employed. Yes, 2 years.
Self-employed for 2 years. So
Yes.
is there possible, like some people have maybe a side gig or maybe their job is their side gig where they actually have like a part-time, they do their business, but let's say they're doing, they have a W-2 coming from some other source. Is there a combination you can use or are you just strictly sticking with either you're self-employed or your W-2 wage earner?
Yeah, I mean, great question. I mean, we can definitely, if you're a W-2 bar and you have a side gig that you're self-employed, we can definitely use both incomes. The only thing is on the W-2, all we're going to ask for is pay stubs and W-2s, no tax returns.
Okay. Okay, good deal.
So yeah,
That's
we can
good. That's
combine
good to know. You can
as
combine.
long as as long it's not the same business.
Okay. Okay. And as far as of course, everything costs. You have to have your down payments. You have to have your closing costs. As far as there's a term in the mortgage industry that we use called seasoning. Um, what's the seasoning requirements for as far as your funds being available in that particular bank that you're using the bank statements on?
Yeah, so right now we only want 30-day seasoning on funds and
30 days.
6 months of reserves on the subject property. Very simple.
Very simple. So are there any limitations on the loan amounts that you guys can do? How far can you go up, or how little can you go down?
Right. So on the bank statement, our minimum loan amount is 150. That's a hard stop, guys. So if it's 149.99, we won't do it. Okay, it's just part of our investors. You know, minimum is 150. And then we can go up to $3 million. And if we want to go over 3 million, we can always ask for an exception. So that's the best part about working with non-QM is that we can give out exceptions. In the conventional world, in the government loans, there is no exception. It's black and white, guys. We work a
Right.
little bit in the gray area, so we can give out those exceptions out.
Okay. Okay. So I only have two more questions for you, man. Yeah, I sure appreciate the information. I'm sure
Absolutely.
the anybody that's looking into that, especially the mention of the realtors. We work with a lot of realtors, so for them to have an expense ratio less than 50% is probably good news for them, because I know
Absolutely.
some of them have some trouble getting qualified
Absolutely.
with your standard banks and credit unions. So that's why they should come to mortgage brokers, right? But
That's right.
and wholesale lenders. So my next question is basically, how long does it take once you have all the documentation that you need? People, they're on point. They got everything that you've asked for. How long does it take to close?
Yeah, so let me just tell you a little, the process of what the loan is in my
Okay.
area.
Yes.
Okay, so there's always going to be a pre-qual going off first. So the pre-qual is going to be a 1003, a credit report, and 12 and 24 months of bank statements coming from you to me. From there, I'm
Okay.
going to send it up to my bank statement review team to calculate income to see how much this borrower can qualify for. If this self-employed borrower is out there shopping without knowing what they qualify for, they're already starting wrong. They need to first get pre-qualified, just a simple 1003 credit report, your bank statements, and we'll see what the calculations come back at. Once the calculations come back, I'll structure out the deal. If the deal works, I'll send you, Will, a pre-approval, which then gives you the green light for that borrower to go ahead and shop.
Okay.
Okay? Once they go shopping and they find a house, we go into contract. You can then go ahead and register the file, lock the loan, request disclosures, get it into underwriting, submit the conditions that we need to clear this file, and get you into the closing table. So right now, I am closing loans between 17 to 21 business days. So a solid 3 to 4 weeks. So I guess you can say within 30 days, we can
Within
definitely
30
close.
days. Okay. Well, that's good to know for me. So tell me. So basically, you're gonna help me do my job, right? You said
Always. Yes.
before I get those statements, I get the documentation, I shoot it to your guys. They're gonna take a pre-look and tell me what the income is.
Correct.
So,
Yes.
and this is before I run any credit, I do any credit checks, run any, you
But we
know,
are going to want to see a credit. So we are going to have
okay,
to see a
so
credit.
okay,
Okay.
so
Yeah.
is,
So
is that is
1003,
that a full hard pull?
yes, a hard pull would be best. That would really see the true story of the bar. It's like
Okay,
going to the doctor, guys, and you're feeling sick, and the doctor tells you, we need to pull blood. And they're like, to see what's really wrong with you. And they're like, no, 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 no blood. Well, then the doctor's really not going to know
right,
what truly is wrong with you. That's the same thing, guys. We're going to need a full 1003, a full credit report, those 12 months to see what you truly qualify for.
okay, okay. Good to hear, man. Good to hear. Man, I sure appreciate it. Is there anything else, any other pointers or any other nuggets that you can lay down for the people, just to, or any
I
final
get my
words?
advice is, guys, don't be scared of the rate. Date the rate, marry the house. There's always going to be a chance to refinance in the future. Just get yourself into these homes. As you know, I mean, here in South Florida, it's a different animal. Homes are still rising. Me personally, I have my cousin who's telling me, "Oh, I'm gonna wait, I'm gonna wait, I'm gonna wait." She's been waiting for 2 years, and now the house is worth $200,000 more. Plus, the interest rates are higher. So, guys,
Right.
take the rate, marry the house. You'll be able to refinance later.
Right, and I try to say that all the time. That's a good point because when the rates are like they are, that's your best chance of getting the house at the price that you want.
Right.
without having a bunch of competition that we
Yeah.
seen earlier in the year with with uh with people with bidding wars, So
That
that's
it
definitely
personally,
a good point.
it personally took me 2.5 years to buy a house. I started in 2020 and I didn't get buy a house until last year of October. And I was getting
Wow.
outbid by 50,000, 100,000, cash offers. It was just, I'm like, I'm not gonna pay for that much for that home. And
Right.
now I kind of regret it because let's just say I would have gave them that, whatever they wanted, 20,000, 30,000 of asking praise or value. Well, now I would have been sitting on 150, $200,000 of equity. So
Yeah,
again,
that's the difference.
it works. So right now interest rates are a little high, but you can work the seller a little bit, get some seller contribution. So I mean, there's a little there's pros and cons on when the interest rates are low and when the interest rates are high.
Okay. Well, I sure appreciate it, Andre, man. Thank you for joining us. Thank you for putting out that guys and good information. And I'm definitely going to share this on all my media sources and social media. And I
Awesome.
sure appreciate it, man.
I appreciate you guys. Thank you so much, Will, for having me. Any other questions, please don't hesitate to reach out.
I will be in touch, man, as soon as I get that next loan that want a bank statement. I may have one for you. We'll see.
All
Hopefully
right.
they can pull through.
All right. Take care, guys. Bye, everyone.
Thanks, Andre. Appreciate it.